So you have counted your levels and attained your bias. The market is going up or down. And after that, you've actually marked your points of interest, which are the zones that you're expecting to see the market reverse. Then finally identified the pattern, right? The biggest question is now, when do I exactly press the buy or the sell button? It might be a very confusing point in time, and in this video we're going to talk about the confirmations you need to see before you trigger trades. But before we go through, make sure you subscribe to this channel if you haven't done so, as well as checking the notification bell icon so that you won't miss any of our content as we upload. So we are going to explain this in two parts, which is divided into techniques. The first, confirmation entry technique, and then the second, confirmation entry technique. So these two can be applied in different types of strategies, depending if you are a price action trader or if you are actually using some sort of indicators on your charts. So stay tuned as we explain one by one. So the first one is actually what we call the high-low rejection technique. So this requires us to set zones of reversal anticipation or points of market interest. By that we are saying we have this point and we are expecting that if the market comes to the same point, we'll actually make an entry. But before we make our entry, we need to see what we call the high-low rejection. So by high-low, we are actually looking for these following parameters, which are: one, fast moving candlesticks to the zone of market reversal. So say, for example, we have this point as our point of interest. We need to see the market going to that zone in a fast moving manner. Then the second thing that we'll need to see is quick rejection of this particular zone. You'd see that the candlestick will come as a very healthy candlestick. In this particular case, it will be a green candlestick, and then later we would see that candlestick shifting away, creating a wick. Then the third confirmation will be to see that candlestick close with a long wick, and this is actually ideally seen on the M15 time frame. So if we see one fast moving candlestick, two quick rejection of that zone, and that candlestick closing with a long wick, it is high time for us to press the buy or sell button. So here is a small illustration of what we are talking about. This was a point of interest. We derived our point of interest from this first leg, assuming that we actually had completed a cycle in our methodology and we had the first point of interest as the first leg. The market went up and went back down, and when it went back down, you can see these points we were being enticed to get into the market, but it was not this particular entry confirmation that was issued. And then lastly, we had this long candlestick. It started off as a healthy red candlestick, and then it shifted quickly and closed with a very long wick, and it was our point where we were going to make our entry decision, and the market in this case went in our direction. Then the second entry technique is actually the closure below or above the 13 EMA, and in this confirmation we employ an indicator which is a 13 moving average, exponential moving average, and the 13 EMA works as a guide that if a candlestick closes above or below, it's a confirmed entry signal. However, we also require bias and pattern determination to do this. So the first thing as always is bias. Then from bias, we need to find the pattern, and then this is when the entry confirmations comes in. So in this case, we can see the same example whereby we have the first leg probably giving us our reference point or our point of market interest, then the market coming to tap that same zone, but we are not looking for candlestick rejection, but we are only waiting to see the market give us a candlestick closure above the 13 EMA. Like in this case, we can see that we had this as our point of interest. From that point of interest, we required to see the market come and tap that zone, and after that we can see this small candlestick closing below the 13, which is the one in red. So after candle closes below the 13, that is when we were going to make our buy, in this case our sell entry right away. So these are some of the entry techniques that we use, and they can actually help you and remove the battle with the markets. Markets is actually a battleground and a big psychological battle, so you need to have things like this to remove some of the market pressures. On that note, we come to the end of our video. Thank you for watching. Like and subscribe, and check out our free Telegram channel. The link is right in the description box below. See you on the next one.